Okay, so welcome to day 2. So just a quick reminder of the agenda for today. We're going to have basically 1 hour for group discussions. We're going to split into 3 groups. There were 3 questions that we introduced yesterday. So each group is going to work on one of these questions, and then we'll come together at the end of the hour and hear from someone from each group for 10 minutes. So let's try to solve these problems. Okay, so just a reminder of what the questions are so that you can decide which group you want to be a part of. So the first question is about revenue sharing, and specifically this question of if you have multiple rollups or users or applications which are contributing to the MEV of the blockchain, then how do you figure out what each participant's marginal contribution to MEV is? Is that discoverable? Is it possible to design? Is it discoverable if you're also going to then give a rebate to each of these applications, rollups, users, based on their marginal contribution? So that was the first question. The second question was about, and remember for this question, it's specifically focused on, because this question has appeared in multiple contexts, and as I mentioned, it's connected to user, to order flow auctions, but specifically the problem here is we're looking at if rollups were to run their own chain, then they would be generating some profit from MEV. And if they're now going to be sharing a common chain for sequencing, they want to be convinced that they're going to be making at least the same profit as if they were running their own chain, right? So the question is comparing these 2 different worlds where each rollup is running its own auction. I had this comparison here with the searchers versus giving their order flow to a sequencing layer and then having the sequencing layer run the auction for them with the searchers and then give them rebates. The second problem is about MEV mechanism independence. So different rollups may have different approaches to MEV. Some want to run auctions to try to optimize and democratize the distribution or use it for funding of public goods. Others want to prevent it entirely. Some favor a first come first serve ordering policy. Some favor some content oblivious policy. Some may favor a random ordering policy, who knows, right? The question here is to what degree can a shared sequencing layer be agnostic to these different approaches and simultaneously support rollups that can choose their own ordering policies? And also caveats of that, right? If we did have a sequencing layer which does that, what are the trade-offs? Does it impact interoperability? And finally, there's a question of how a sequencing layer that is not executing for each rollup should charge for transactions. So one challenge here is that it doesn't, because it's not executing on each rollup, it doesn't necessarily have the ability to charge based on the gas consumed by transactions, because in order to check how much gas transaction is consuming, you have to execute it in general. So it could be charging just based on the size of data, but again, now everything that gets sequenced has to be then executed by the execution layer. That's the whole idea here. The execution layer can't choose what to execute and what not. Otherwise, it would have the power of deciding what gets included rather than the sequencing layer. So how should transaction fee mechanisms work with shared sequencing layers? There's another question of how the sequencing layer verifies the correctness of this fees. That could be an independent rollup, some minimal state that's just being used for fees. But that also could create a UX challenge where users now have to pay in 2 different currencies. So there's a question of how to deal with that. Great, so those are the 3 problems, and we're going to split up into 3 groups. I think 1 is going to be in here, and then 2 are going to be in conference rooms. I think the one in here is the only one that's going to be recorded. See everyone at the hour.
I think there's like 2 different problems, both of which are really hard here. One is even just to know what the MEV is. So first of all, at the level of the shared sequencer, like when you combine everything, how much MEV is there? And then maybe even like more hard to understand how you'd ever know what it is the counterfactual. If a rollup ran on its own, what would the MEV it would get if it was standalone? Right, so question one I view is just like elicitation, like how do you even find out what these numbers are? Question two, which is completely separate, is like suppose magically you knew all of these numbers, how would you do the distribution? That's maybe the easier problem, I kind of feel like. That starts connecting to the stuff Quintus talked about yesterday around Shapley value and that kind of thing. And there's not going to be any like perfect solution, but I think there at least you probably get a handle on like different trade-offs if you actually knew the input. So yeah, so just, I feel like it's good to just like whenever we're working on something to be clear in our minds which of the two things we're trying to tackle, because they're both, I think, pretty hard problems.
So if you had a trusted shared sequencer and the searchers just put in bids for bundles of transactions, and there was kind of like a bid for each individual transaction in the bundle. Seems like that would be a starting point.
For figuring out what would have happened in the standalone rollup, you mean?
Yeah.
Like a lower bound on how well it would have done.
Yeah.
So you're saying users at least are...
Well, if there's a competitive market for searchers, then you should
I see.
get some sense of how much each individual transaction is adding to the value.
So this would be eliciting at the shared sequencer level or for an individual rollup?
At the shared sequencer level.
Right, that makes sense.
Yeah.
I agree, so that seems...
So, because you could always have like bids for just an individual transaction at one
Right.
rollup, and if there's a higher bid to include it as part of some cross rollup bundle, then that's a signal about how much MEV is being added by the sort of.
So I guess, can you really differentiate MEV per transaction? No, right? Because it's not often that like this one transaction is causing that MEV, and sometimes it's the case, but sometimes it's like you need two other transactions in order to actually extract that MEV correctly.
I think there's another good point that like, how much MEV is generated by like the interaction between transactions as opposed to just like, but like if you think about like the order flow auction vision, the way I hear about it, it's often like a transaction has some MEV and then the OFA is designed to elicit what that is, right? So that's sort of what you were saying, Joe. And then conceivably, there's actually like a ton of extra MEV maybe that's generated if you take different transactions and assemble them in just the right like magical way. And that again seems like a harder version of the problem. So I sort of agree with Joe's suggestion that just like maybe it's not true, but to get started, let's just imagine the transactions kind of have their own well-defined MEV, and like then what could we do? And then you can worry about sort of complex interactions. That would be my.
Maybe the market would fail for some reason, but like you could start with the assumption that you figure out the individual MEV because that some searcher will put in a bid for, just a bundle of one transaction.
Of one transaction, right?
Yeah.
Right. And then, but you could imagine, like, say, there's like three different searchers, and they each tell you kind of the standalone MEV of three different transactions.
Yeah.
But maybe then a builder is like, oh, if I sequence them B and then the bundles B and then A and then C, I'm gonna get all this extra stuff for myself,
Should
right?
some searchers see that too and put in a bid and say like if I can run A, B, and C, I'm willing to bid like X, Y, and Z for each of them, and if there's a competitive market, that should sort of they should bid the entire surplus out.
Yeah, this is a great question. I mean, maybe. I mean, I think it's a good. I mean,
unless they have some alpha, right? But like.
Well, no. There's something else which is also hard, right? Which is just that if you auction off transactions separately, you're sort of the amount of information you're getting total. Like if it's n transactions, you're getting n numbers back. As far as the transactions. Whereas if you actually have these interactions, there's kind of like n factorial different outcomes you might want information about. So there's inherent information loss if you only ask people about transactions separately.
I mean, I was thinking
you might hope that in a competitive market they sort of figure out how to bid in a smart way and extract most of it. Maybe.
Well, I was thinking people could put in bids for any set of transactions.
Oh,
but then,
I see.
Yeah, and then you do get into this exponential blow up.
So I'm wondering if there's a similarity between like a problem of thinking about MEV for one domain and another domain versus a combined domain versus the problem of thinking about MEV for one transaction, another transaction, and the combination of the transactions. Like if there's some similarity there. because you could make the same argument, like we're trying to solve a problem of, whether it's MEV from this domain or this rollup or this rollup. But I think a similar problem that we haven't first solved at all is like the
Just one
MEV for
domain.
this, just restrict to
Yeah,
one domain.
I don't see how the cross-domain changes the economic picture.
I think
really
it
at
should
all.
be pretty much the same problem to figure out, like,
Yeah,
did the
I
MEV
agree.
come from this transaction or this transaction
Or their
within the
combination.
same domain itself? Because I think it's kind of the same problem, and
Yeah,
that
right.
itself might.
Doesn't that assume some like normal distribution of alpha or surplus, which is not the way we'd see it, right? Like a Uniswap rollup would be 95% of the MEV in the current context, and you would say, if I'm a sequencer and I know that I'm sequencing Uniswap versus like a payments chain, you're probably gonna have the shared state that wants to be near each other with all the MEV on one rollup, and then the cross-domain, the distribution is unlikely to be nice and uniform. It's gonna be very concentrated around like hotspots of state contention and all that stuff.
Yeah, it's fine. I mean, you can make the same argument for like Uniswap transactions versus transactions from some other contract on one domain itself, right? There's some MEV that comes about just from extracting Uniswap transactions themselves, and then there's some MEV that corresponds to maybe like pulling transactions from some other contract, maybe like a flash loan contract or like an Aave or something like that, and the combined MEV from both of those contracts. So I think it's kind of a similar
I
problem.
mean, I guess you are adding a third entity because there's the users who submit the transactions, and then there's this shared sequencer plus the rollups that sit on top of the shared sequencer. So you do have to like split the pie with a third party in this case, right?
With the sequencer, the shared
Yeah.
sequencer.
So there's kind of, maybe these are the two separate questions. There's like how you split the MEV between different transactions in a bundle that are dependent on each other in some way, and then how you split, the total MEV between the shared sequencer and all the constituent rollups that are sort of providing more of like a flow over time of transactions.
Yes, if you imagine a world where the shared sequencer takes 0, then they sort of become sort of the same problem, I think, right? But you're saying.
Sort of, except there's still the question of like these individual rollup servers could sort of like walk from the whole thing and say like, I'm better off not being part of this shared sequencer, then I can capture all the MEV, and you have to think about like how much they should get over time so that they don't want to do that.
Yeah, that was there's a selection bias for what would want to be on the shared sequencer. In that selection bias, it's like, why am I using a shared sequencer? That would probably have some properties natural to the fact that we're in multiple domains, right? Like that's why we're
Yeah.
even using the shared sequencer.
Presumably, you're using the shared sequencer because you think it will grow your business overall, right? Because like more users will want to use your rollup if it's part of a shared sequencer because they can get better atomicity or bridging or whatever.
We know
feature
that
they
during
like.
the maturation of these things, it changes, right? When you launch Uniswap with no liquidity, that's a very different, like pre-saturated Uniswap versus post-saturated is a very different, why I would use a shared sequencer, right? You're like, as these things mature, they have different properties and you start to see different infrastructure to support it.
Yeah, makes sense. I mean, I would think using a shared sequencer, like you have to give something up, like some percentage of the total MEV flow, but you're hoping like the whole pie will be bigger by being part of the shared sequencer ecosystem, and I guess you're making some meta decision to stay with it.
Yeah, and that's actually something I'm very curious about, right? And we can tie it back to that. So back to the question of just like, suppose you even knew the MEV of people combined and what they would be separately, right? So like really simple, 2 rollups, each one can get like MEV 10 by themselves. Now the question is, what's the MEV if you put them together, right? If it was 20, that would be really simple. You just refund it like 50-50, right?
And then
If
they
it's
should be like neutral about joining.
Yeah, then they're like indifferent. Now, if it's 30, right, then maybe the shared sequencer takes some, and maybe they each get back more than 10, and so they're sort of happy. But like one thing I'm worried about, like what if it's 15, right?
Well, then
Like,
they
do we have a
should-
sense of that?
then
Do we
they
have a
should
sense
split.
that it's like always sort of synergies between people in the same sequencer? Like, is it clear that more is better always, or I'm not sure. Is it so super
Doesn't
additive
seem
with
like
the
it,
term?
how it could be worse, because the worst case scenario is that there's no cross-chain MEV, and then they should still have the same amount of separate MEV, right?
Yeah, I mean, if it's, I don't know, if it's
I
2
don't
roll ups,
understand
yeah, I
how it
don't
could
know.
get worse.
Maybe, okay, maybe. That would be a good sanity check.
Could it get
Only
worse?
if you change the properties of block times or something that had some interactive thing, like, hey, we have to inherit the block time to get this network effect, thus we have different MEV properties.
Could end up with like pathological edge cases where it would be different because if you do the state update on one chain first, then that kind of affects, like it's using, the second chain is using this one as like an oracle. And that's why the state gets updated on the second chain as well, which makes the MEV there smaller when you're trying to execute that transaction later.
I see.
So basically, like doing both of them separately, one after the other, might not actually result in the sum of the MEV. But that's kind of maybe a pathological case.
And then, John, on your point about the network effects, I'm actually, this is sort of coming out of Josh's presentation yesterday. It occurred to me that, could you imagine a world where people are using a shared sequencer just because they wanted a really lightweight launch of their rollup?
Exactly. And so you have an immature launch. You don't want to launch your own set of sequencers because you can't launch a centralized one single sequencer. And so you get a lot of immature things launching on the shared sequencer layer just from a ease of launch perspective.
Among which there may be no network effects, among which it may just be purely additive, the MEV kind of qualities. Okay.
And that's why we go through this maturation cycle. The properties of the shared sequencer should change. Like Ethereum with no state versus Ethereum with all the rich state is a very different function. So you can see a winner take all dynamic in one of these shared sequencer networks if it gets the place that everyone wants to launch a marginal rollup.
It might also give you some credibility when you're launching too.
Like as a tested stack or whatever.
Yeah, also
Yeah.
just like credible neutrality that, you're not asking people to trust your own
Validator set or
sequencer
whatever.
that might not
Would there
be
be
trustworthy.
economics of scale, right? Which is the sequencers because they have DevOps is fixed. Let's say that's a fixed cost and they're scaling. That might make them more efficient, more higher uptime than SLA style performance.
It's also maybe possible that you get more MEV out of being part of a shared ecosystem because the searcher market is better and more mature. So they'll squeeze more out.
I guess, so what is the vision there? Like, if people had to guess, so suppose you have a shared sequencer with like 30 rollups, is the thinking that probably you would have a searcher that just looks across all of them at the same time, or they'd be specialists? I have no idea. So.
Yeah, you get like searching liquidity, which is if I have this pretty complicated cross-chain arb and it's doing a solver, whatever we're calling the searcher's algorithm to start to figure out what it's going to include, it needs more complex things to get these like 9 roll-up MEV transactions, and that searcher liquidity might be where everyone, the transactions could have better, get confirmed faster, more likely, all that stuff.
So one kind of potential counterpoint to your argument where you have new rollups sort of join shared sequencing is the fees can potentially be higher, like because let's say there's like limited processing power the shared sequencer has, and there's like it's handling 30 different rollups. What can happen is if a new rollup wants to do like lower fees, then maybe those transactions don't get included when the shared sequencer is creating its sequence. Versus like if they did their own rollup, they could probably give users like much lower fees.
Yeah, it's the life cycle question again, which is early in the life cycle, that's not a problem. Late, maybe. Once we get saturated block space or saturated sequencer, then we would have to then, we're full, what do we do now?
Yeah, like adding a new rollup to an already full
Yes.
sequencer, like shared sequencer is like an interesting.
And so you can see people giving out negative economics at first, like Uber, to attract like rollups, come build here. We'll basically sequence for free, right? We don't care. We'll give everything back to you, such that we want to bootstrap our network effects to get these searcher liquidities and other things, because it's worth it for us to pay at the beginning.
It almost feels like designing an optimal currency area. Just like,
What does that mean? Sorry.
well, there's this big question like in economics, I guess, like,
The first thing I've understood.
well, you could probably explain it much better than me, but there's a question like, should the EU keep adding members? Like, should all countries be on one currency? When is it better for a country, a small country, to have its own currency? And it's like, you have the opportunity to be part of network effects from being part of a much bigger currency area, but you give up local control. The monetary policy might not, always be tuned to what you want specifically. And
So any lessons from traditional economics would you take for that, reasoning about these?
Well, one thing which is a little bit puzzled by, and that is, are we assuming that there's multiple shared sequencers, so there's competition in this space? And then I think then kind of what you were saying is that that division will happen through the competitive process, right? So the people who are offering the flow will have some knowledge of what they can get on their own, and the sequencers have some knowledge of the economies of scale or whatever it happens to be, and they'll be willing then to pay, right? And they'll pay each one of the potential inflows a different amount depending upon which has the most value. So that'll come out of the competitive process.
I think we're assuming there could be competition. Like it's not clearly a winner-take-all market, but it would probably be a small number. I think it would be like, maybe the analogy is like airline alliances where there's like a couple and plus one or two independents, and probably like you said, I think in that case they've like hammered out, some negotiation between every member airline and the alliance, and they're probably all getting a slightly different take of everything.
Right, so that's a good analogy in that there are the different airlines want to partner with an airline which fills in the gap that they have, right? And presumably for these sequencers, there's two things which are very similar, and there's two things which are different, and you want to get the things which are different in order to maximize the agglomeration benefits.
Yeah.
Like if you have buyers and sellers, then you want both of those, right? But you don't want all buyers or something like that.
On the other hand, if you're thinking about like cross-chain MEV, you want the similar ones together, right? Because that's where the arbitrage opportunities are. Where like if you have two chains of AMMs, you want them on the same sequencer so people could efficiently arbor.
So that makes it sound like it might be a winner-take-all market then. With the one caveat that I think in cryptocurrency space, sometimes like natural winner-take-all markets, people don't want to appear like that there's one big centralized piece, so there might be some like pressure for appearances to not seem like totally unified on one shared sequencer.
Yeah, we didn't talk about the returns to like vertical integration, saying like it's the same entity all the way through the stack, and how much advantage does that give somebody? Again, we try to design these things so there is no advantage inherently, so that you get no benefit from knowing things that no one else knows. But we've seen it in PBS a little bit, or some of these things are integrating and getting access to flow that other people aren't, and because of that they can quote better, they have a cheaper rate on Binance, so they can quote tighter on their on-chain, off-chain arb. Like those are things that aren't naturally obvious when we're designing some of these things, and they might appear.
And so what caution should we have then, thinking about the design from that? Like what are the lessons that we should take from
I
that?
don't know.
Okay.
Because some of these things were emergent and non-obvious, I guess is the bigger thing. It was just I think people were obviously aware that PBS could have some centralizing forces, obviously. But,
So I'll make a conjecture. We talked about like the two different revenue split questions, like between individual transactions and between the rollups. I think the first one needs to be solved algorithmically because that will happen like 1 million times an hour. Like different transactions from different chains will be bundled together, and you have to sort of split the fees or the MEV like rebate. The second one might play out on a very slow timeline. Like I don't think that rollups will switch between shared sequencing layers like multiple times a day or even.
Like you renegotiate your contract every couple of years or something like that.
Yeah, so I think that could be solved at like human level.
Yeah.
By negotiation around the table and everything, and I suspect those ties will change very slowly. So you don't need some like automated mechanism necessarily.
I guess we solved it.
Well, I was gonna say, I mean, it feels like we could still attack the first problem independently, which doesn't even have to do with shared sequencing necessarily. But just,
Elicitation, you mean, or which part?
yeah. In the second part, you could still try to come up with guidelines for like if you are the shared sequencer or the rollup in the negotiation, like what should you ask for, or when should you decide you're better off independently, or
Yeah, but like you say, that's probably not programmatic, right? That's probably outside of that, yeah.
well, you still might want to agree to some programmatic split though, so that like as your volume changes over time, your payout changes, right? Like you probably won't just agree to like some static amount per month, but
Yeah.
The interesting thing is it's kind of like an information revealing game too, which is, so let's assume that the people who are making these decisions are the rollup service providers. And they say our contract is 5%, and whether this is public or not.
yeah. Although 5% of what, we still have to answer that question.
Right.
Yeah.
And then I guess my point was more around the interactivity of the next person say, well, we'll do it for 2% or we'll do it for 1%, right? If a lot of these contracts, as far as I know, are done opaquely, and people don't really actually know the competitive dynamics unless they're in a negotiation with private information. There's not like actual selective pressure on the fees there.
Yeah, so Joe, you suggested as far as like 5% of what? So one initial stab would be like the sum of the winning searcher bids, basically, right? I guess I guess there's pretty weird incentives for the shared sequencer to collude with searchers to keep those bids low, right? So it's like, how do you audit the?
Not if the shared sequencer is also getting a percent of the same thing. Although maybe they have like
The worry would be
kickbacks or
they
something.
extract a lot off chain, right? That'd
Yeah.
be the concern, right? So there's a question of like auditability of the shared sequencer's kind of overall revenue, which seems
Right.
tricky.
I see. So you're saying like they collude to have like lower nominal bids, but they're
Right.
getting paid off.
But there's like a side agreement where they sort
Yeah.
of split the extra.
You need like a CR list basically to say like, this is what we expect, this is what we're seeing, and this is the delta. That means that this person's colluding and not providing.
Yeah.
DYDX is working on this for their kind of like shared order book. I don't, you know how many they have? It's like 20 nodes? But like they have like 8 order books they have to figure out, is one node extracting a bunch of MPV, but to see that they have to see some common order book.
But they also made some very weird design decisions, or is my opinion. Like only posting trades on chain. So like all the ads and cancels aren't there. So it's like I can spoof
Isn't it the
I
point
can do
of like
spoofing MEV that's like completely unrealized ever to the final reviewers of trades. So it's like
isn't that like the dream of the intense model though, is like that you don't have to publish on chain all this stuff that's never matched or consummated or whatever.
yeah, but if you're trying to get an audit trail for these
Yeah.
payments, you definitely need to know like something about
Yeah.
the spoofed orders.
Just kind of kills your efficiency though, right?
Sure, but you are making that trade-off, right? There's probably some impossibility thing of like you either get optimal efficiency on just some approximate thing, or you like completely lose your ability.
Yeah. I mean, I suspect in practice people will go for the efficiency and just rely on some like trusted brand, you know, that, which would make it even more winner take all. But like if the shared sequencer has a brand where people like trust that it's not colluding or it's giving a legit audit trail without it being on chain. I mean, isn't that how Flashbots basically works today?
Well, PBS you have sort of an audit trail, and in fact by accident, because like none of the builders have turned off the historical data from all the auctions, which is like kind of hilarious. I think like eventually they will. Someone will be like, okay, it's not that hard to trail this off. But right now it's like social consensus on everyone broadcasts the historical data of all the bids they've ever received forever.
How is that authenticated though?
You don't have any guarantees.
Yeah.
But you're saying taking those at face value, you could check that the highest bidder was the one that was selected,
Yeah,
and so
you
on.
can go.
Yeah.
You can also use that to see if people are subsidizing, because you can see the amount they're remitted post auction and the auction price, and you actually see like all the small builders are paying subsidies right now, like pretty high subsidies, like 20%. So forget about like 5%.
You could probably make that slightly better cryptographically if you like committed to the full set, and then you could sort of prove individually to people that their bids were actually included, right?
I just don't think. Yeah, I feel like the latency aspect of this makes it like very unlikely that people are going to do.
Well, you could do that as some like post hoc auditing thing, right? That's not really a critical path.
I mean, yeah, right now that's what you could actually use,
Yeah.
assuming you trust it.
So if you're worried about this collusion problem or like accurate data reporting though, like I'm trying to think if you could solve that by changing what the 5% or what the take is actually computed over. Like is there some other signal that's harder for them? There's less incentive for them to manipulate.
Should there be competitive forces at some point though? Like assume the searchers can pick from different shared sequencing layers. If they're, I guess you're saying that there's collusion
Well, not the
vertically
searchers,
too.
because the searchers would be in on this like collusion, right?
So the searchers and the
Searchers
sequencer
are-
would be taking the cut that should be going to the rollups.
Because it's basically, it's like a three-party deal, right? Between like searchers, rollups, and shared sequencer, and there might even be pressure on like other pairings of two of those to collude, right?
And you do already see this, where like the builders that are searchers definitely are shading their bids, and it's like pretty, this is what I'm saying, it's like crazy historical data to the public. And I don't know how long this will last, it's probably only another few weeks until the next update, but.
Is this like an inherent principle that anytime you have like three parties trying to split some pot, like any two of them are incentivized to collude? And
There is a divide the dollar kind of example, which is just like a very, very cartoonish version of this. So 3 people try to split $1, right? And the point is like, no matter how you try to do it, there's always an incentive for 2 of them to make a side agreement. So,
Interesting.
yeah.
Divide the dollar. Yeah, makes sense. So then that implies like even if it was 5% of something else, like there's kind of this fundamental problem in this space that like this all is supposed to happen pre-consensus, sort of for, I guess this is what Tarun was saying a second ago, but like either you commit to everything at the consensus layer, in which case you've like nuked the benefits of having L2s, or you sort of have to trust somebody because the data is not all going to be like authentically committed. Like at that point, you're running everything on chain. No?
Yeah.
And Ben's argument would be you get some heterogeneity versus, hey, we're just specializing in this and we're making some trade-off that's very optimized for this specific kind of back and forth. And that would be the marginal improvement versus just committing to the L1.
I mean, there's also some communication complexity. Like, the commitment scheme always has like 2x communication. I mean, if everything was FHE, but fortunately it's not for it.
Yeah, I do like the comment, I forget who made this, but the idea that like, competitive forces plus kind of like like if you build a reputation as a sequencer, you will probably be able to extract more from that. And then there's a question of like, how do you get that reputation? Maybe you sort of enable audits or what have you. But I wonder if like one, from my perspective, like one sort of maybe weird analogy is when I think about like publishers, like for books and like the contracts I sign with them, right? So like for US distribution, I might work with Cambridge University Press and I sort of trust them more or less. But then when I do like the Russian translation of one of my books, right, I just sort of say like, pay me a good advance because I don't expect to ever see another dollar after the advance, basically. And so you could imagine similar kind of shared sequencing layers out there with the same trade-offs.
Yeah, empirically on L1s, there's the biggest trading infrastructure service provider who's generating transactions for most of the big trading desks. We spent time with LMD. They're like, look, our customers care mostly about inclusion. They need to get their transactions in as fast as possible. They don't care if they're going after the public member, whatever gets us included as fast as possible. That's what everyone cares about. And the notional value of that is, I think they do like a couple $2 billion buying a day through that specific kind of condition. Is that we don't care. And so all we care about is reputation and inclusion. Like that's what that's how they're making their transaction pipeline decisions.
So you're saying they don't care about MEV or?
They don't care about MEV because their customers all their customer cares is I want to get this included as fast as possible. And so if they were putting it through some shielded pool with 10% of the hash rate or inclusion rate, they would not do that because they want everyone to see it. They want to get included as fast as possible.
So they don't care about getting front run, or?
Interesting.
Not really.
Are we sure that's rational? Like, do they understand what they're actually giving up by getting front run?
Maybe they call very autonomous, so there's
Their flow does not have a ton of MEV associated with it. It's generally the second leg of a settlement, of a trade. Like I'm just settling, okay, I'm just sending you this asset.
Oh, so it's just a transfer.
It could be just a transfer, right? Like generally most trading is like here, you only see one. And so front running is not a giant thing. If they were running much more complicated on-chain trading strategies, probably. But they don't care about that. Which I was shocked at, but
I see, so they're just doing the price discovery and so forth off-chain, and they're just
Possibly.
settling on-chain.
possibly.
So there's no information in
Yeah.
your,
But again, their customers care about they want to make sure everyone's using it as fast as possible. And I guess the reason I brought that up was really, these transactions are very heterogeneous in terms of what people care about and why they're going to broadcast into one set of servers versus another. And sometimes just inclusion is the principal effort.
Is it possible that different rollups would somehow work with multiple shared sequencing layers, or is the only model we could think of that like they're tied to one shared sequencer and they're sort of exclusive with it?
Well, some of them want multiple data availability, which is harder to reason about than multiple shared sequencers. So really, I don't understand how you reconcile a fraud proof when like you have two layers and you have to like somehow you have to get the state.
So they're not like multiple redundant data availability
It's unclear
layers.
how the redundancy is done, because it's like you can choose your own.
Because there's a model, there's like a RAID 0 model where you just like write the data separately to every data availability layer, and then it seems pretty obvious. But if you're like striping it half, then I agree, it's a bit weird.
Yeah. I think the bring your own data availability thing is allowing the developer to choose what portion of their state is represented. So you could write a poorly written contract stuff.
I don't know, that seems okay though. It seems like the users of the contract are eating that risk. And
I feel like it to me it seems very unsafe to do that.
so what would it look like though if a rollup server like had multiple shared sequencers that it was party to? It could just kind of alternate blocks, or
You're saying the shared sequencers are ultimately posting to Ethereum, say, or?
well, you mean like all the rollups?
Like, are they in the same ecosystem? Like,
Oh.
are the two?
I guess. I mean, imagine it's a bunch of rollups that sit on top of Ethereum,
Yeah.
and then there's like multiple shared sequencers, and you're like, I don't want to be like tied to Coke or Pepsi here. I want to use both of them. Because if clients just care about max inclusion, you could say like, oh, well, we take we take transaction bundles from multiple shared sequencer layers.
I guess maybe a simpler question is, can the rollup have a shared sequencer and also have their own sequencer?
That'd be another model, yeah.
So that like clients can decide whether they want to go to the shared sequencer or just like the
Yeah,
sequencer.
I mean the trick would be like what happens when some searcher bids a lot for a bundle that includes transaction X, and then transaction X is like preemptively executed through the direct sequencer or some other shared sequencer, and then it kind of like precludes some entire transaction bundle. Like there would be these weird dependencies, I guess.
Is there some for like tether forking type of thing? Where like the main sequencer announces that they're not going to take any transactions? I don't know. I only even heard of this concept because of you. Yeah.
Is the thinking more that the types of transactions that you would want to sequence together, is that going to be changing across different rollups all of the time? Or is it going to be the case that sort of two rollups have a natural kind of connection, and that it's going to be a more permanent thing, that these are the ones you're going to want to sequence together?
I think it will probably like drift over time, but in the short run, I think there will be some stable sort of pairs that see a lot of synergy. But I guess you were saying a second ago, like some clients like have a very simple flow, which is just a bunch of trades. So maybe they're like, we don't care about the shared sequencer. We just want to submit direct to the rollup and sort of be done with it. And there's not a lot of MEV, so who cares? And then others might be like, oh, we should go through this shared sequencer so that there's more, cross-chain MEV captured.
The non-obvious thing, if you're comparing this to like equities, where you're saying like, okay, I'm just doing arbitrage, I'm buying Google here and selling Google here, is that we don't have one-to-one fungibility of assets actually. If you're on different rollups, on different L1s, right, like they are actually literally different security assumptions, trust assumptions throughout the stack. And so if you're trying to do this cross-domain arb, you're actually buying and selling two different assets. At the end of the day, you're buying like arbitrary ETH and optimism ETH, which are not the same thing. And so arbitrage is almost the wrong word for it, because it is not a one-to-one swap. And so a lot of these like intents, these cross-domain atomicity ideas, people think they can be deterministic, like 0 or 1 or binary, but they're really like a probabilistic curve of like how alike are these two assets. It's like how alike are USDC, well USDC is 1-to-1, right? It breaks this concept because it's all racking back to some
native.
Yeah, exactly. So like the syntheticness of it is actually a probabilistic score that when you're doing arbitrage, you have to assign the likelihood that you're going to get back to the actual native asset. And so that's actually much trickier than I think most people realize. Is the searchers have to have a tolerance between 0 and 1. It could be 0.7, it could be 0.2 when they're doing these cross-chain, cross-domain things. And that brings in a lot of discretion and choice and like market forces, which is not as synonymous as people think with arbitrage. If we assume number one form of MEV is centralized, decentralized arb for the same asset, that actually makes sense. Like ETH on Binance and ETH on, well, Binance the custodial, it's counterparty risk, but when you end up with the asset, it's the same thing. And so the reason I bring that up is if it's possible for the sequencer to improve that in some way or give you better, I don't know how, I haven't thought through enough why a shared sequencer would provide that. But that would be something that would be an edge and would be interesting to people.
So right now the shared sequencer would just give you the ability to atomically do the two trades, but they wouldn't net against each other because it's different running chains. Or different rollups.
Whereas their DA, I think it gets much more complex the more we break apart what the asset is. Like how much heterogeneity we have in assets makes atomic arbitrage harder, in my mind.
Well, also decentralized shared sequencers definitely can't guarantee that much, right? Because they're not guaranteed to have the same laws.
You're saying like two different sequences.
Yeah, exactly. Like they sort of have to agree on those missing guarantees, and then you get reduced back to like, oh, I'd rather some one sequence or share across many if I want those guarantees.
Right. Which is where a lot of these network effects would show up. It's like I can get better and better and better the more liquidity I have, or sequence of liquidity I have.
Does anyone know how OP stack bridging is supposed to work? Or do they have chosen because like I don't understand it. There's all these different role open source people, each will sequence your OP stack thing. Somehow you eventually can go back to OP mainnet. Is that the same sequencer, or does like every sequencer sequencing OP stack chain have to guarantee that they are a sequencer of the main chain? Because then that also doesn't make sense. I don't know what the guarantees are.
Too bad we have Kevin from Optimism on Zoom there, theoretically.
There it is.
Oh yeah, wow.
Well, yeah, sorry. Honestly, the audio is not great. I did go with this stack though.
Yeah, the question was, how does like maybe bridging's wrong word, but how do cross OP stack rollup transactions work? Does a sequencer who's sequencing an OP stack rollup have to also be sequencing the main OP stack chain, or do they have some guarantees on like inclusion? Are there any attempts at guarantees on inclusion to the main OP chain?
Yeah, this is not going to be a satisfying answer. I think that's the only ours, and I think we're still figuring it out. Like honestly, the approach right now with OP stack is like everyone's using the exact same configuration and all the same modules that like will be easier for us to figure this out in the future. So it's kind of a non-answer. I think right now that it's in the research phases. That's happening a lot more with Ben and Carl. But yeah, I don't think they need to use the same sequencer though to do bridging. I think in the long term, we should probably be using proofs to verify cross-chain messages between the abstractions.
But do I get any guarantees that the main sequencer will verify proof within K blocks on the main chain? More from the arbitrage standpoint of like, suppose I was doing arbitrage between the OP stack chain and the main chain. I'd want some sort of like latency guarantee, or maybe guarantee is the wrong word, but some type of probabilistic measurement of how long until I get included. Is there any like form of trying to bound that or make that like, yeah, do you think the like main chain sequencer will have some inclusion guarantees where like some portion of a block is allocated to verifying other OP stack chain proofs or something, like on every block?
Sorry, honestly, it was cutting out.
Basically, the question was like, on the main OP stack chain, will there be some portion of block space like allocated just to verifying these messages versus it being competing with?
Like on OP mainnet.
Yeah, on OP mainnet.
That's currently not a part of the design, no. Like kind of like functioning as some like settlement chain or something like that, you mean?
Just exclusive access, like something reserved for the cross-domain stuff, versus it competing with all the other blocks.
Yeah, there's currently not planned like there to be a distinction of like OP mainnet's function in a messaging versus like any other OP stack chain.
Well, that's a cartel that's interesting. The OP stack sequencers and the mainnet sequencer have to come to some economic agreement to guarantee this verification within some time. Otherwise, it's just like two separate chains, right? You might as well just not. Then it's just like a normal bridge node kind of.
Yeah. I mean, is that a simple problem even if you put the economics sort of aside? I mean, it's.
Well, a form of this arrangement might be like other OP stack chains. If you pay some amount of OP, you're guaranteed to include you know some block space is reserved only for this verification. But like you know, suppose the other OP chain could prove it was running like exactly the OP stack with particular modules that were supported.
Who's presenting from the first group?
I think to summarize, so we talked about how to share revenue from MEV. I think we said there were kind of two distinct problems that we were maybe getting muddled together a little bit, which is how to split the MEV between different transactions that are included in a bundle, and then how to share it kind of three ways between searchers, rollups that are on top of a shared sequencer, and the shared sequencer itself. I mean, the proportion that searchers get is probably tied to solving the first problem of figuring out how much each transaction is really adding MEV-wise and right what each transaction should be paid. So the first problem, I think we said it's hard because there's kind of an exponential space of different combinations of transactions, and it's hard to elicit the value of each one before you can even start thinking about like a Shapley values or ways to split the value up. But that problem kind of exists even without a shared sequencer. So maybe it's more interesting in the shared sequencer case because the space gets even more complex and more transactions go into a bundle maybe, and maybe the values are in different assets on different chains, but fundamentally the same problem but more complex. And then the second problem of how to solve kind of the three-way split between shared sequencer, the constituent rollups, and the searchers. The good news, I guess, on that problem, we felt like we had maybe even less of a sense of how to, what a good split is, but that problem will probably between different rollups that are sort of joining as part of a shared sequencer, the shared sequencer itself, and then also searchers that are submitting bundles of transactions. But at least the split between the different rollup servers on the shared sequencer and the shared sequencer itself, we are thinking that won't need to be solved nearly as often or as quickly, because rollups won't be switching between shared sequencers really quickly. It will be much more of like a sticky arrangement that they meet for a long time. We had some questions about, I guess, how permanent that would be, like what the feasibility would be, what the friction would be for a rollup server to switch from one shared sequencer to another. We were also curious if it made sense if there was any model for a rollup to take transactions from different shared sequencers in some kind of arrangement, or if they're sort of inherently tied in a one-to-one relationship with a shared sequencer. That we kind of came up with at the end, so I was curious if anybody else has thought of that before, or thought if there's any model
Just repeat that last question.
If there's a model for a rollup server to work with multiple shared sequencers in some way, or if it's inherently kind of a one-to-one relationship, like a rollup server takes all of its flow from one shared sequencer and that's it. It could be multiple shared sequencers, or it could be one shared sequencer plus it has its own rollup specific sequencer, kind of like a direct submission pathway.
Well, you're essentially asking if there's a way in which you can use multiple consensus protocols to agree on your order. Well, I mean, you could take some kind of logical composition of what the outputs are, but ultimately
you could possibly like round robin between them.
Right. I mean, I guess you're like essentially designing like a meta level consensus protocol that's now taking individual consensus protocols as input.
So you're saying it sounds hard.
No, it's not hard. It's not clear what, I mean, it may compromise on the properties that each give to you, but there are compositions of consensus protocols, right? I mean, even Ethereum is a composition of two consensus protocols, essentially.
Right. Yeah. So, I mean, we were thinking about that because that might change the dynamics of basically, like, the easier it is for rollups to switch between shared sequencers or take transactions from multiple, they might be able to demand sort of a higher cut of the MEV because they would have like more ability to leave and get a better deal on another shared sequencer, or just do it themselves.
Was the conclusion that it's difficult to just figure out a way of estimating the marginal contribution of each rollup to the MEV, or in other words, how much they would be making on their own, and therefore the conclusion is that at least we don't know how to solve that yet.
Yeah, I think the conclusion was like we don't know how to solve it. You know, we were thinking of really simple things like the shared sequencer and also the individual rollups get some fixed take of searcher bids for different transactions that are included in a bundle. And then, you know, somehow some of that goes to the shared sequencer and some of it goes to the specific rollup server for each transaction. That's something that you could at least, you know,
so like
put down on paper.
Sorry to make this interactive, but I feel like the simplest question that is related to this would be, let's say that you have two transactions, two items that you're auctioning off, and nobody really wants these items individually, they just want them together. Mm-hmm. If you were to run two separate auctions for them, then you still might have bidders bid on both because there's a certain probability that they will get both, and they're not going to bid as much as they would for the pair of them if you ran a joint auction, because there's some price to that risk. So is there a way to run an auction where you can discover how much they would bid in the separate auction case, even though you're giving as an option the bundle?
Okay, so maybe we could go through that, because that I think can illustrate the two different problems we were thinking about. So I think the classic things like a left shoe and a right shoe.
Yeah, that's great. Yeah.
Yeah.
So like I want both shoes, so it's valid. The pair of shoes to me is $100. I don't want the left, I don't want the right, but I'm willing to bid on both because there's a certain chance I'll win both auctions.
And say like for some reason the left shoe and the right shoe are being auctioned on two different chains, two different rollups. So I mean, we're thinking like the first problem would be basically figuring out, you know, what value those two combined really gives. Mm-hmm. And that was the first problem. We were saying that's the same whether they're auctioned on the same chain or on two different chains, right? You still have like searchers can put in a bid for the bundle of two. And, you know, in the simple case, like you can notice that searchers are willing to bid much more for a bid on both, right, than for separate bids. And
I guess my question is, like, if you're running the auction though for both, why would anyone bid individually on each if they can just submit a bid on both? Like, why would they truthfully report, like, if we were running separate auctions, this is how much I would bid on each, if we're running an auction now that's giving the pair?
So, I mean, if the value is like truly zero, then you would see zero bids, and I guess you would impute like a value of zero if you don't see any bids. But somebody might bid some epsilon, right? Like you said, there's a probability that they end up with both, or they end up with one and sell to the person who has the other. So there's probably like a non-zero price even just for the right shoe.
Oh, interesting. So you're saying that you could still have, if you give people the option to bid on both, or either one individually, then you think that some people might still bid on one because they can then sell it to someone else, but they won't have to compete for the bid on both or something?
So like, suppose someone puts in a bid for the right shoe for like $1, and someone puts in a bid for the left shoe for $1, and then you see like a bid for both is like $100, right? Then that gives you like some signal that like there's a lot of value of the two together, and then, you know, you have to figure out like a way to split that surplus, but at least you'd have some idea of what it is.
Is there like a theory of this problem in auction theory, or?
Yeah, it connects pretty strongly to the literature on combinatorial auctions.
There
you don't have a notion of an ordering like you do on transactions, but it's the same features where you have like an exponential size set of things that you're worried about. And so people's preferences might be over that very rich exponential size set, and then you have to decide on the bidding language, and do you just like elicit bids on individual items, or do you allow them to bid on bundles, and if so, how do you compute prices? So that's all, I think, somewhat relevant to this discussion.
The problem's just, like we said, like getting bids on every sort of subset of items, and also like exponential number of subsets. And
yeah, so I guess the usual, if you take like say spectrum auctions or something like that, which are kind of a real world deployment of commercial auctions, there a lot of what you do is you're kind of like lazy about it. So you sort of like, if people, you don't sort of upfront ask everybody for their bid on all exponentially many things. You're like, look, if you feel like bidding on this bundle, like feel free, and then like we'll figure it out at the end. And so there are these rules about how do you charge prices based on bids on different bundles in that literature, which perhaps one could draw on.
I don't know that I'd be as concerned about the exponential number of combinations, because if we have, let's say, 5 rollups and that we're looking at sharing revenue with, I mean, there can be many more, of course, but let's say there's 5 in particular that are trying to come up with a revenue sharing model, and the builders are building blocks wholesale for each. So it's really just bidding between either building a block for an individual rollup or some combination of subsets of the 5, which is tractable.
Yeah, but one problem with some of these things is their communication complexity is not low. Like you might have to have many rounds. Like that, the resale of the shoe is adding extra communication complexity, right? Because you have to have another auction for the retail.
Well,
Or
what
another
level of
transaction.
communication are we talking about here? If there's only 5 items that are being,
Possibly exponential in 5.
well, but it's
Are you willing to
exponential
do
in
a
5.
32 round? Are you willing
Right,
to do
no.
on chain a 32 round
Okay,
auction?
32 rounds would be a lot.
That's
yeah.
what I'm saying.
Right.
Like you have to, you shouldn't
Uh-huh.
kind of underestimate that
Right.
effect
Okay.
latency-wise.
And
Interesting.
actually, one high-level takeaway from that commercial auctions literature is that this specific case, the like 0, 0, and 10 together,
Yeah.
is like really hard in like many senses.
Uh-huh.
Actually, I mean, if you know it's only going to be a bounded number of like transactions where you have this complementarity, but like if it might be like large sets of bundles that all of a sudden unlock all this value, that's just like very, very difficult to deal with
Right.
through auctions. So, you know, at the moment we haven't even solved the case where, in my opinion, we haven't even properly solved the case where the transactions don't interact at all.
Right.
And then you can also imagine, okay, let's go to the case where maybe you get like a 20%, you know, increase if
Yeah.
these things go together. What can we do there?
Right.
That would be my advice, to focus there.
Uh-huh. It seems like this problem arises in other industries, right? Like you have shops in a mall. I mean, there's other maybe it's not addressed through auction theory, but it's a similar situation where you could have one flagship store that's contributing the most in terms of revenue and should get a discount on its rent.
But like you say, you would not do that with an auction.
Right.
It's like
Right.
long negotiations
Right.
with lots of people at the same table at
Right.
the same time, right?
Cool. Okay. Maybe. Yeah. Go ahead.
yeah, I was just gonna say, yeah. So I mean, so we were the stores in a mall is probably a place to end on, because yeah, we were thinking like this. The combinatorial auction part is kind of like needs to be solved algorithmically quickly. It's a hard problem. It exists in some form, shared sequencer or not.
Yeah.
And then with shared sequencers, with rollups joining your shared sequencer or splitting off on their own, deciding what to do, that's something that you could start by just like hammering out an agreement, you know, like a paper contract slowly around a table, and assume that, you know, your rollup's not going to change more than yearly, right? Or at least not super fast. So that's maybe more like the stores in a mall aren't literally having an auction, but they do have some like slow back and forth, and they do give the big corner store better rent, and it's probably all not very transparent and maybe not like completely efficient, but they approximate it with people negotiating. So yeah, we were thinking like maybe that happens with rollups deciding to join this shared sequencer.
Cool. All right. Thanks. Thanks, Joe.
Did I miss anything from the people who were in the group?
Great. Okay. I'll do the group 2. Maybe we can pull this whiteboard. This is the MEV agnostic sequencer. So it's the idea here is that we have some shared sequencing layer, okay? again, we can just think of the sequencing layer as Ethereum itself. It could be something that's a module on top of Ethereum, which is maybe more optimized for data availability and ordering. But we can, for purpose of the discussion, we can just think of the base rollup model, where basically rollups are doing computation, but they want to use the decentralized layer 1 for ordering and availability of data, right? So let's say now, because Ethereum itself is not really implementing threshold encryption or time boost, like first come, first serve ordering policies or other kinds of ordering policies, to what degree can these different rollups running on top of this common sequencing layer have their own ordering policies? So let's just look at a few examples. So let's say that we have this rollup 1, which wants to do some threshold encryption. So what we talked about is how this rollup 1 could designate its own, and we'll talk about the caveats of this in a moment, but it designates its own threshold encryption set, okay? It designates its own set of servers. This could be involving the governance of the rollup or not, whatever. It could be, again, it could be decentralized as well. The concept is simply that if each rollup were running on its own, trying to decentralize it, they wouldn't each be able to end up as decentralized as the sequencing layer itself. So for purpose of the discussion, we're going to assume that every rollup can designate a set of servers. It won't necessarily be as decentralized as the common sequencing layer, but they can still introduce it. And that will be important for the discussion of what are the trade-offs here of having this separate set of servers that's in charge of something. So in this case, the set of servers that's specific to this rollup will be threshold encrypting every transaction. So every transaction that a user submits, so the transaction is valid for the rollup if and only if it's threshold encrypted under the correct key. And the users would just be submitting their transactions still to the sequencing layer, threshold encrypted under this shared key, and it would be ordered along with everything else that the sequencing layer is ordering. And at the end, when the rollup reads from the sequencing layer, then this set of servers will threshold decrypt the transactions at execution time. Okay, and if something is not threshold encrypted, it would just be dropped. It wouldn't be considered valid. Let's go for another example first before we talk about what could be in other words, what are we losing by introducing this extra set of servers? Are we still gaining a lot from the shared sequencing layer? What properties are we gaining? Which are we losing? So let's say we have a rollup 2 that's doing first come, first serve. So in first come, first serve, generally there's two components, right? There's some atomic broadcast or consensus protocol. There's also some set of servers that need to agree on timestamps for transactions. A transaction needs to be sent to every server participating in the timestamping, and then they need to broadcast those timestamps to each other, and there's some mechanism to end up agreeing on what the outcome is. Of course, there's the Condorcet paradox, but we're just ignoring those details. So the idea would be the same. Designate a set of timestamping servers and the transaction would have to be sent to each of these servers to get timestamped before it would be considered valid by this rollup, so that we'd have this timestamped transactions would then be sent to the common sequencing layer. An important thing to note here is that when you have some kind of first come, first serve ordering mechanism, there is a much sharper trade-off between the latency of the consensus protocol and its decentralization, because a transaction needs to be sent individually to every single server to get timestamped, and then they need to broadcast their timestamps to each other. whereas in other consensus protocols, there can just be a leader that collects all the transactions and then broadcasts a hash of the transaction to basically erasure codes and shards and makes available the data and collects signatures. So point being, there's more restrictions here in terms of what needs to happen in a very decentralized set of servers before a transaction gets approved. So here we would definitely be looking at a set of timestamping servers that's much smaller than the set of servers that are participating in the sequencing layer. So now the question is, okay, well, sequencing layers that are common, they're supposed to provide us with a few different properties. So first, censorship resistance. Right? These are things that come from decentralization. Censorship resistance, certain economic properties. The fact that the leader in a consensus protocol is elected once in a blue moon. If the distribution of stake is very flat, then it behaves in a short-sighted way, so it will just take whatever it can get to build the most valuable block. It won't try to engage in long-term revenue maximizing strategy. So this is important for like EIP 1559. It's important for PBS. It's important for proposer-builder separation. And then finally, there's the finality guarantee, or non-equivocation, right? Once something has been stamped as final by this sequencing layer, then based on the fact that there's a lot of stake behind this that will get slashed if there's some equivocation later, the user knows that the transaction is final. Okay, so now let's look at which of these properties are preserved when rollups are introducing this extra set of servers. So the first thing that goes out of the window a little bit is censorship resistance. I'll say at the end maybe one way of recovering it, but this is important to recognize. This set of servers that are in charge of threshold decrypting can now censor transactions. This is not entirely true for threshold encryption because if we introduce some kind of time lock encryption mechanism, because the user threshold encrypts the transaction on its own. It doesn't have to first send it to these servers for approval. So if this is somehow time lock encrypted, but the trapdoor is secret shared among these servers, then that might be OK for censorship resistance. But certainly with first come, first serve sequencing, because this set of time-stamping servers needs to receive the transaction first, the weakest link is now, for censorship resistance, is now this set of time-stamping servers. OK? But censorship resistance is not the only thing that this shared sequencing layer is providing. So to the extent that these ordering policies like threshold encryption or timestamping don't entirely control the ordering, and they don't necessarily control like atomic dependencies between transactions, other things that a builder network might handle, the ability to be compatible with PBS and also the pricing of getting things sequenced on this common sequencing layer can still benefit from the decentralization of this in terms of anti-monopolistic properties. On the other hand, it's important to recognize that if you have the ability to censor for your rollup, then for just transaction inclusion, you can jack up prices, right? So the timestamping servers could raise a base fee that could be well above whatever the base fee is for the sequencing layer. But on the other hand, when it comes to MEV that cannot be extracted just by these timestamping servers or just by these threshold encryption servers, we're still potentially getting the benefit of this common sequencing layer in controlling for MEV. Then finally, finality. So we still have finality from the sequencing layer. One way of thinking about this is like, let's say that a rollup has a designated builder, a centralized builder for that rollup, right? Would there still be a benefit to running on this common sequencing layer in terms of the finality that it's giving? And the answer is yes. So a builder can censor transactions, but it's not as trusted to provide finality, right? The builder could still cause double spending if it tells someone, hey, your transaction is final, and then equivocates later before settlement on the L1. So in many ways, the sequencing layer is now acting as a notarization service, which says, okay, builder, what do you want to have final? Okay, now this is final. Right? So the sequencing layer is still providing this final stamp of approval, which gives users confirmation that their transaction is done and won't change before it's settled on the L1. And lastly, when it comes to censorship resistance, we talked about how what we could do is have an ordering policy that's just for the beginning of a block and not the tail, and that regains some censorship resistance. So for example, we have a policy that's implemented in the rollup which says the beginning of every block has to be threshold encrypted, but the end doesn't need to be. Or the beginning has to have these timestamps on it, but then there's some tail of the block that doesn't have to go through the timestamping servers. And that's interesting to explore more. In terms of interoperability, we talked about ways that we can still have a builder, a shared builder, that can say, make some promise to a user that it will only include transactions if they execute on both rollups. That is still possible, but we need to be careful about making sure that the threshold encryption or the timestamping isn't on an already valid transaction, that there's some step where the builder gets something threshold encrypted or gets it, it's easy for threshold encryption, but gets like a part of the transaction timestamp before it adds a signature so that these sets can't submit the transactions independently. The builder can still participate in an auction and only submit both transactions if it's able to do both. Okay, so that's problem 2.
All right, we'll try to go through, is this working? Problem 3, like really quick. So problem 3, like is somewhat similar to like what was discussed in problem 1. What we roughly talked about was kind of the user experience of how transactions are going to be submitted through like a shared sequencer, and a lot of the questions was around payments. And so how would a user pay for a transaction to be included on one rollup or many rollups or like a shared sequencer, and what is the chain of payments that needs to happen if we assume there's kind of 3 layers, where you have like a rollup and you have a shared sequencer and you have like a DA layer or a settlement layer or whatever you want to call it later, right? Presumably the user probably wants to own like one token, and they want to pay for that token. If we think about the existing user experience using like, ETH, right? If you're going to use like Uniswap and you're going to submit payment for Uniswap, Uniswap has a front end. The user is actually interacting with the front end and signing a transaction. That front end needs to interact with some stateful RPC to actually generate this kind of transaction bundle to give the user the opportunity. So we assume that flow is probably going to be the same, and that a user is still going to interact with the front end or something to generate a transaction. And then there's a question of when you get a collection of rollup transactions, how do those get submitted to the shared sequencer? Where we trended to, just trying to like really summarize this, is like essentially like a PBS market, where we assume there will be some market, whether it is off-chain or whether the shared sequencer itself has some kind of protocol-owned building or enshrined PBS solution, such that the transactions that are submitted to the shared sequencer would be submitted by sophisticated actors, and the key benefit they provide is that these sophisticated actors can be assumed to be running this kind of multi-rollup knapsack problem to determine what is like a good block to submit to the sequencer. Because one of the core things you want to resolve here is that, like we use like the shared sequencer of like a rollup up here, right? A rollup is going to have some stateful execution loop that is going to have some limit on the amount of execution it will do for like a given amount of like fees, and or like it should have like a strict computational limit, right, to like be able to run a node. The shared sequencer is strictly like not going to be aware of that limit. So if you include a bunch of transactions in the shared sequencer, the subset of those for any given rollup may mean that there's like 100 transactions and only like 50 of them execute. That's undesirable. That's structurally pretty similar to like getting reverting transactions. And so we model this like similarly to what you saw with like priority gas auctions prior to like MEV Geth, right? Where you can say you can resolve this by having off-chain actors that are economically incentivized to be state aware of a given rollup, such that when they construct like a bundle or like, a block for the shared sequencer, they are to be aware of the state and thus the limitations of the execution that would actually occur on one or more rollups. From the shared sequencer side, again, you can question of like whether we actually end up with ever having transactions, as in like a single rollup transaction submitted to the shared sequencer, or if the steady state is such that the shared sequencer is only ever really doing what we see with these protocol-owned and like optimistic relays, where the shared sequencer says, I don't care what is in the block, that's up to like the rollup, that's not my job. I want a set of bytes and the highest bid for that, and that's what we're seeing on like ETH validators for like optimistic relays right now. They just want what is the block that pays the highest bid. That's what we see a steady state potentially reaching. The other questions that we got into a little bit was, what is like the fee payment mechanism on the sequencer, right? You can say the sequencer presumably has to still have some mechanism where it can do accounting on it, such that it will actually include a thing, kind of giving us these kind of like economic properties and like finality of like, you know, non-equivocation. Like if it actually accepts like a bid, why would it do that? If it didn't have a guarantee that bid was actually paid, that's easiest if it's just on the native state machine of the shared sequencer. But it could also be some, you know, various of the models that like the Suave guys have like proposed, right, where you can say, okay, you're going to post this on this bulletin board and the payment settlement is going to happen. It could happen on the rollup, it could happen on some settlement layer, it could happen on like ETH, it could happen like out of band on like Venmo, whatever. But there's various designs for how the actual payment is going to occur of this is the proposer for this round of the shared sequencer. They're going to choose to accept the block. How they do so is a pretty broad design space, but yeah, so in summary, like users will have normal interactions with RPC nodes for given rollups, and you will probably have some sophisticated group of PBS-esque incentivized actors who will say, I'm only going to create and submit, you know, blocks of transactions to the sequencing layer that are not going to revert for the execution layer, because why would they bother to include these transactions that are presumably not valid to someone else on some other layer, and various designs for how you can kind of hold that accountable. Useful things to note, right, is like standard as like, you know, ePBS is like a still pretty novel kind of design space. We've seen some stuff from like the Skip guys in protocol and building on like osmosis. Question of how much state needs to happen in the sequencing layer and how generic that needs to be to satisfy various kind of inclusion mechanisms, or, you know, how you're getting a guarantee of like the execution, the guarantees. Generally, we should assume that these like off-chain builders are like semi-trusted people that do have the opportunity to like brief an end user, but it's going to be essentially like a reputation-based system as we have with searchers builders in like ETH today. Did I miss anything from the group? I know we had like 5 or 6 things. I think there were a couple, but like Nusrat, do you remember the one that we missed?
No, I think that was pretty comprehensive. The only thing was we also thought about what if like the builders might be malicious, and for that there are like different methods. Like I think one of them is like that short term is using TEEs, like having them being run on TEEs. The other one is like later on proving that this is the gas cost via a succinct proof, but these are like future steps.
Generally, this converges to the normal kind of PBS design space, which is rather broad, but we think there's actually a lot of like good parallels. It just says, okay, does your knapsack problem become like combinatorially more expensive? Because now you say, I'm not just simulating one state machine, I'm simulating one state machine against many others, and this gets into kind of the revenue sharing mechanism, right? Where you say, well, how do you determine what was like the optimal block? How do you determine the sharing? Well, you have to calculate a bunch of counterfactuals, and that can be an expansive set depending on like how many rollups you have using a given shared sequencer. Cool.
All right, thanks so much. If the discussion leads from each group could maybe just send me some notes on what you discussed, and I'll share them with everyone in case that was too fast. But yeah, thanks everyone. This was really fun. And hopefully you got convinced that there's some interesting problems here. And if you're continuing to think about it, and then, you know, please reach out to anyone here everyone who came in terms of a guest, I think is very interested in this problem space. So hopefully this can be the start of a longer discussion that we all end up having. Great, okay, thanks so much. Yeah.